Good morning, options traders. Steve Ganz here, and I wanted to share with you some bad things, okay? I show a lot of trades that go well, things are working out great, but it's also important to see when things aren't working out and to understand how you think about that. What might you do about that? So I'm going to talk about the company with the symbol AVGO, which is Broadcom is the company's name. Now, in my last video I referred to this multiple times as NVIDIA. I apologize for that. I have a very similar trade on personally in NVIDIA, and I made that mistake in that last video. So forgive me on that, but let me show you what transpired here with Broadcom or AVGO. So AVGO had run up considerably, and I think you probably recall here that this is the trade I had on. So I was up significantly in this trade. This is a single long call that I bought quite some time ago, back in October of 23, almost a year ago. So I'm up, $100,000 or so with this one long call that I had spent about $9,800 on. If you want to know more about that, please go look for the prior videos here in this channel. Now, when the market had rallied up and then it was starting to sell off, I took an opportunity on this rally right here to put on a hedge. Now, that hedge was essentially selling a host of call spreads against my long call. And what that did for me was that would potentially protect this trade against a little bit of slippage or a little bit of drop in the value of AVGO. So what happened here is AVGO dropped over the next few days all the way down here to 129. Now, at that stage, what did that mean? Well, if I come down here to 129 on my hedged trade, this value would have dropped from the 113 or so area down to about 85,000 in value. In my unhedged trade, coming down to that same area, this would have dropped to about $73,000 in value. So the value of my position dropped quite a bit more in the unhedged trade. This hedge trade, while the value of the stock and my long call declined, this hedge, which is basically what people would call a bear call spread, this hedge gained in value. But now let's look at where we are market-wise. So I was looking brilliant here. Well, the market has rallied back hard all the way back to above where I actually put that hedge on. So right at this moment, yeah, I'm not looking so brilliant. I mean, in a perfect world, I would have maybe spotted that this was a support area technically for AVGO, and I could have come in and potentially taken that spread off that day, locked in all of those profits on the spread, and then let this climb back up. I would have been super, super brilliant had I done that. But again, I put this on as a hedge. I had other things I was looking at that day. We had that big market sell-off or Monday ago. So, I had plenty on my plate that day. This did not hit my radar, so to speak. And we have rallied back from there. So what do I do now? Well, right now I'm in the position of this particular hedged trade being up 106. The unhedged version, had I still had that on, would have been up 113. So this hedge right now is costing me a little bit of money. Am I going to leave the hedge on? Take it off. Well, if I look technically at this, basically what I have done is I've set an alert that says if I get above this level here, 173, I need to take the hedge off and accept my loss on that hedge. If we get above here, we're probably going to all new highs. Now I see right now in the pre-market here this morning on August 20th, it's selling down just a touch, not a lot. But I do feel that we are at an inflection point here where the market may roll back down a little bit. But the market's been very, very strong, so hard to tell on that. If we stay in this general area, or we pull back, just a little bit into this area, we can see that there is still quite a bit of decay that can happen on this. If we stay right where we're at, at expiration on these options, they can be worth quite a bit more. The value can go up to 114,000 from the 106. If I were to be fortunate enough to get a little pullback here into this 165 area, or so, and it decayed there, it could be worth even more yet. So, point to this whole video is I'm not ready to pull the plug on this yet, but I did want to share with people how a hedge can work for you and how a hedge can work against you. It's really important to me that people understand the pros and cons and the good things that can happen on a particular trade and the not so good things that can happen in a particular trade. So again, my game plan right now is I have a stop if this gets up here into this 173 range, and having a tool like Option Strat that I can go ahead and model this out and I can see all the what ifs is really, really important to me. It's very helpful to me. And this is how I look at trades, and then come over and look at a chart and evaluate the chart and what's happening in the market. So hopefully you find this of value. If you do, please like, subscribe. Greatly appreciate that. Any comments are appreciated as well. And I do apologize for my brain fade on the last one of these I did, where I kept calling Broadcom, or AVGO is the symbol, AVGO. I kept calling it NVIDIA. So please accept my apologies for that. Take care.